Hey everyone, welcome back to Arrive, the podcast where we spotlight SaaS founders' journeys and growth and unpack the tactics that turn an MVP into high ARR. Today's podcast is brought to you by Phantom Growth. We partner with SaaS companies to build predictable pipelines of qualified buyers to help SaaS founders reach their ARR goals, all without a big sales team or massive ad spend by leveraging AI and proven systems for growth. If you're curious how Phantom Growth helps SaaS companies create predictable growth, check out Phantom Growth, Phantum growth.com to schedule a call. Today's guest is a former Wall Street hedge fund analyst, Richard Sun. I'm really excited to have him here on the podcast. He is the founder of Alpha AI, an AI-driven investment platform offering personalized institutional-grade investing, making that accessible to everyone. With features like Smart Stash and dynamic risk management, Alpha AI empowers users to invest smarter with less effort. Thanks for being on the podcast, Rich.
No, thank you so much for having me, Austin. Really excited for it. Yeah.
I'm really excited to interview you and pick your brain. You have a unique background and it's really unique what you're creating here with Alpha AI. So I guess just to get into it, I really want to dig into your story and how you got to where you're at today. So I guess my first question for you is what led you from hedge funds and investment banking to building Alpha AI?
Yeah, so I went to Wall Street like right after college, and since I was working there, uh, friends and family, they would like always come to me asking for investment advice. Like it would always be the same typical type of questions. And after years of answering those questions and trying to help people out, I really realized there was like a big gap between Main Street and Wall Street. Not only just in terms of the knowledge, right, that's there, but also in terms of the products, the solutions, the different kind of investment solutions that were available. So basically, I founded Alpha AI with just a general mission to bridge that gap, between Wall Street and Main Street, and trying to make sophisticated and tech-forward investment solutions available to the everyday investor.
Very cool. I would imagine that has come with a lot of challenges. What have some of those been getting rolling?
Yeah, like I mean a ton, right? It's a typical startup life, trying to find product market fit. And I mean just to preface for the viewers, right? We're still really early on here, so it's not like we really, found success or what success feels like to me yet, but so we're still grinding, we're still early. A lot of pivots, trying to find that product market fit. And of course, as a solo founder and entrepreneur, sure the viewers could appreciate this, but you got to wear all the hats and you got to just be doing everything you can to make the business successful. And that's kind of where I am right now.
That's not an easy spot to be in. Give us a little insight into kind of the day to day or the mindset of where you're at and how you're trying to solve those problems.
Yeah, I mean, every day is different, right? And I think that's what makes it difficult for me as the founder is like literally one day. It's basically like shifting the mindset, right, in terms of what you have to do. So within a day or within a week, I would have to go from, actually building the product and coding to, of course, there's like an investment component, right? So then I got to put my CIO hat, my chief investment officer hat on and monitor the markets and be doing all sorts of things there that I used to do, at the hedge fund. But then, there's other aspects too, right? Like marketing, things that you don't really learn right on Wall Street, like marketing, building the website, identifying your target audience, customer interviews, that kind of stuff. And, product management, right? Organizing everything together. You've got like different launches, trying to prioritize the features. I mean, the list goes on, as you can see. It's just like way too much. And the main issue for me is just it's hard to switch between everything.
Yeah, because you want to just be focused on one thing. And for you, it's
That's
probably building that product and not wearing all these other hats.
Yeah, I mean it's all important, right? It's
Yeah.
like what product are we building even in the first place, right? Like the features that I think people want could be vastly different from what there actually is a demand for out there, right? So all of the work really is important and it ties together. And especially in the early stage, you need to be doing all this, touching all the areas as the founder until you figure something out, and then you can kind of outsource it, and start building out your team. But until you get to that point, I don't think there's a point in doing that.
Yeah. Well, I don't think you're alone there. I think a lot of SaaS founders are building and coding a lot of things that in the end they realize there's no demand for. Did you experience that at all from the beginning?
Yeah, it's luckily we didn't go too far down that path. I know that's like a silent killer of startups is building before validating. Yeah, I mean, when I started off, there was kind of two major pivots we had to make. So coming from Wall Street, I was working with like institutional investors, very, very sophisticated investment strategies. Like, for example, at the hedge fund, I specialized in market neutral long short. Viewers don't need to know what that is, but you just need to know it's a sophisticated investment strategy that only like institutional investors have a need for. But of course, right when I came from Wall Street, I was like building this out for like the everyday investor. And then I realized like nobody really even knew what this was or like had a need for it. So it's like I kind of went down that road. And but then we pivoted from there after doing more user interviews and research. But then I went too far the other way. We started building just like very generalized investment strategies. And I guess by being too general and trying to build something for everyone, we ended up not really appealing to that many people, if that makes sense. Like, especially as a startup, you need to find like a niche, right, that has an underserved demand or a demand gap, right, and build something to solve the problem for the people in that niche. And so it wasn't until we pivoted and became more niche that Alpha AI started taking off.
What do you think would have sped that process up getting to that niche, or do you think it was just time was needed?
I think it's, well, speeding it up. I mean, so I'm like a first time founder with no like formal, let's say, training, right, in this area. So if I had known maybe some rules of thumb ahead of time and approached it in a more scientific way, meaning the preliminary areas like identifying my ideal customer, identifying their needs and then building a solution for that, it would have made it a little bit faster. But at the same time, you kind of need to build and see like how people are using your product and how it's received in the market and continually iterate from there. So, it's a little bit of both.
Yeah, it's totally a touch and go activity, figuring out all the getting
Yeah.
as much validation as you can while building the ship. It's the best analogy I've heard is you're trying to build the ship while you're build the plane while you're flying it. And it's just like
Yeah,
totally is what it
exactly.
feels like.
That's a great analogy.
Yeah, it's not an easy task. So you came in with all of this knowledge that you had learned from Wall Street, but you didn't have a background in tech. So what challenges came from turning your expertise into an actual tech product?
Yeah, I think so. Just to clarify, I came from Wall Street, but I studied math in college. And so, for any of my fellow math majors out there, you'll know that you do have to do some computer science as well in there. So, it wasn't like a completely foreign aspect to me. And what made it easier because, we're focused on AI, like it's just basically math. So luckily I had done all those classes and like really understood kind of the theory at the core level. So it made the AI aspect easier for me. And the challenging part was like the actual code. But luckily, it wasn't hard to learn. Like nowadays, like with AI, it's like mostly in Python, and they have all these cool libraries, right, that are very intuitive in terms of the language that you use. So it wasn't anything like self-study and anything like that couldn't solve, right? So that was kind of the challenge, right? So, but I handled all of the technical aspects on like the trading side, right? Building the AI, building the automated trading systems, the data pipeline, things like that. And then actually translating that into an app was the difficult part. And so there were definitely growing pains there, right? Because as a solo founder, I also had to be the CTO. No experience there, so I didn't really know what I was looking for when I was interviewing people to help me out. Definitely went through some failures there initially until I was lucky enough to find the right team and the right partners there to really take the app, handle that, and take my AI and investment core and translate that into the app. And that's kind of when Alpha AI started taking off.
How did you come across those people that you ended up working with, took that off of you?
Yeah, I mean, I was really just looking, just over and over, right? Like trying to find the right people. And luckily, it was like by chance almost, because I knew, I don't know why, but like at first I wasn't really open to outsourcing or not outsourcing, but like offshore development. I'm sure fellow founders know there's like several centers, right? You've got Eastern Europe, you've got South America, India, the Philippines, like they all have incredible talent in these areas, and it can be kind of a cost-effective way, right, to help build out the technical side of your product. And no, I ended up going with a team out of Eastern Europe because their culture sort of matched the way I work in terms of they were very, I think that's the most important thing is like you have to match each other. It's not necessarily the skill, like everybody kind of has a skill, but the communication and how you work together matter a lot. And so I found them to be very like matter of fact, honest, and like realistic in certain terms of their timelines and what they can or cannot do. Whereas, others might overpromise and underdeliver. They would definitely, you know, check my assumptions, right? And be like, okay, this we can't do for this reason. And they would be really upfront about it. And, that's what kind of led to us working well together.
That's
Yeah.
huge. That's a huge aspect. That was probably a huge relief for you to get that
Yeah.
off of your back.
I mean, because it's like I have this investment system that I built. I know it works, right? Like I've been running it on my own portfolio, but hard part was building the infrastructure to bring it to the masses. And so, that you can't really learn by yourself. You do need formal training for that. So,
Yeah.
yeah.
No, that's not an easy skill. It just immediately translates. Were there moments where what you thought was intuitive didn't translate for the user and you guys had to go back to the drawing board?
Yeah, I mean, I think a lots like almost every feature, right, that we release, because it's hard, right? Coming from me, right? I have a certain level of knowledge, and so things are just obvious to me, like in terms of investments or whatever. And people would be asking, right? Like,
Like, what is
what is
that?
what does this mean, or why do I need this? And also, not just about investments, but also just like the app itself, like the UX, right? The flow, the way I think things make sense might not be the way that people actually interact with the app. And so, I mean, that's like a whole other side. But yeah, I mean, so it's like iteration. Like you'll launch something, and then based on what people say, you'll make some improvements. And yeah, that's kind of how we got to the platform today.
So just making little changes, minimum viable products across every single feature.
Yeah, yeah. Like you don't want to overbuild because you don't know what people want at first. Yeah, just release the MVP or something minimal, right? And then you'll get a sense, like based on what people say or how they interact with your product. Yeah.
It's such a unique space, especially in the financial world. That's got to just be even more layers of obstacles to overcome because you've also got to walk on red tape lines and make sure that everything's compliant.
Yeah.
That's not easy. There's a lot to deal with there. So, in terms of, would you guys consider yourself a robo advisor? And if so, what differentiates you guys from the others out there?
Yeah, yes, right, and no. So I mean, we have two sides of the platform. One is we go direct to retail customers, retail investors, and the other side we sell to other advisors. So we have a B2B side. But on the B2C side, the retail investment platform, yeah, I would say we're like a robo advisor. And for those that don't know, robo advisors, they kind of became very popular back in like the late 2000s. The most like the biggest ones, the most famous ones are Betterment and Wealthfront. And I mean, what I'm about to explain to you like seems like a no-brainer, but you guys have to keep in mind that the investment industry, especially for retail investors, moves extremely slow. So the innovation back then was simply you sign up to the app. Okay, first of all, you don't have an app, right? So that was like an innovation. Second of all, you sign up and you answer a few questions, and then they kind of come up with a portfolio allocation of ETFs for you. Like, okay, we'll automate like 60% stocks, 40% bonds, or something like that. And then within the stocks, we think you should be in these five ETFs that are exposed to equities. And within bonds, we think you should be in these four ETFs that are exposed to fixed income. And then what they would do is they just rebalance your portfolio every quarter so that the percentages match up, like of your allocations. And that was it. That's it seems like a no-brainer, right? But like back then, that was like an innovation. But
Right.
right? Yeah, and they got really popular because of that. But they haven't changed like since then. So to this day, if you sign up, it's the same thing. It's called passive investing. So your portfolio allocations, they stay the same. So the main difference with Alpha AI is that we're actually doing active trading. So with a focus on managing risk. So the idea is, our AI identifies how much risk there is on the market in the market based on various types of data, like all the stocks there are, macroeconomic data, et cetera. And based on that risk level that we perceive in the market, and also the user's profile, including their risk tolerance, we'll adjust the allocations dynamically, like in real time to match the market. And the idea is like when conditions are more uncertain, we'll try to increase the short exposure, or in other words, we try to like decrease your risk. Okay, another word is called hedging for those that know,
Yeah.
basically to minimize your downside. And then when conditions are favorable, we'll try to increase your market exposure to basically capture that upside. That's like the really, really basic idea behind Alpha AI. So yeah, that's the main difference is that we're actively trading and others aren't.
Oh, that's so interesting that the others haven't grabbed onto that.
Well, it's a tough it's a tough sell because, you know, and a lot of viewers, like if you're savvy, you've probably heard the stat that like 80% of active managers can't beat the market. Like, so the best thing you can do is just invest in the S&P 500,
Hmm.
right? And I don't disagree with that advice for like the majority of people. Like, it's really hard to beat the market, and that's not what I'm saying Alpha AI will do. The main thing I noticed though is that people just didn't have a way to manage their downside risk. So the goal is not to beat the market. The goal is to minimize your losses during times of like extreme volatility, right? So
Yeah.
during, for example, COVID or more recently, like the tariffs and stuff like that, people like they don't really have the time or knowledge to be logged into their brokerage, right? And monitoring the data and stuff. And oh, should I sell now and go more to cash? And and then the emotions get high, right? You get some negative emotions or whatever. That's what we're trying to help people with. Is like we'll just introduce a systematic way, right? Just let us handle it, and we'll let the data and the algorithms do their thing to try to handle the risk for you.
That's brilliant. Computers are
Yeah,
so much smarter than we could ever be and can monitor that. So, especially in the finance world, it makes sense. That's
yeah.
really cool you've tapped into that. So, I'm curious about your ICP, and it sounds like things have maybe adjusted throughout the timeline of the existence of Alpha AI. So, have you ever you ever felt any misalignment between your current ICP and where the product seems to deliver the most value?
Not currently. I think currently we're in a good spot. Of course, that could always change, right? But it's the result of like a lot of iterations. So as I mentioned before we were like very generalized and trying to target you know, every type of investor. And yeah, I realized maybe we were targeting, the wrong type of investors or the wrong ICPs were coming onto our platform. But no, I did a ton of user interviews and research to see how people were getting the most value out of Alpha AI. And I noticed there's like a niche, like more specifically, people who have a higher risk appetite, typically millennials and Gen Z. A common feedback I got was they were also users of Wealthfront and Betterment, and the highest risk option available on those platforms was like not at all close to like what their expectations were. Like these are people that want high potential upside, understanding that there's also high potential downside, but they have that risk appetite, right? So
Yeah.
yeah, that's kind of our ICP that we settled on. And so our first two strategies that we launched, one is trading leveraged ETFs, that's live. One we're launching soon is going to be trading crypto ETFs. And then you know, doing this, I actually know, like I found a different ICP, like a separate one. So these type of people, like these investors, are like active traders, right? So they have high capital gains taxes, and so everybody is like very tax conscious, and that's kind of how I came across this like tax aware target audience.
Interesting.
Yeah, so it also fits with our mission of making sophisticated investment strategies more accessible. So in recent years, like direct indexing has become very, very popular. Like more and more companies are offering that now. For those that don't know, it's a type of strategy that replicates, instead of buying the S&P 500 ETF, for example, it replicates the index by buying the individual stocks in the proportions of the S&P 500. And so because you're investing in the individual stocks, you can like more easily harvest tax losses. So if one of the individual stocks declines, you can write an algorithm that says, I'm going to sell that and stay out of it for like 30 days so I can realize a tax loss there. And so, yeah, that's like become super popular in the retail investment space. I'm like, I don't know why it's so popular because there's another type of strategy called tax aware long short. There have been a ton of papers written about this, but it essentially can realize like 10 times or more the tax losses of a direct indexing strategy. But it's a little bit more sophisticated because you have to use leverage and you have to go long and short in index. But I'll give you a super simple example. So just going back to the S&P 500, you could run a strategy where you're 200% long the S&P 500 and then 100% short the S&P 500. So your net exposure, 200 minus 100, is just 100% of the S&P 500. But the short, what it does is let's assume the market goes up because it typically goes up. The short will just lose money, like, right,
Yeah.
over the course of the year, and you're continually rebalancing it, so it's continually generating losses. And at the end of the year, you basically swap out all the shorts. You stay out of them for 30 days, you swap to something else, and that essentially allows you to realize those losses as tax losses. And you can use those to offset, for example, your capital gains taxes. That includes from active trading. That also includes from property sales, or if you're a business owner, you're selling your business, that's also going to be taxed as capital gains. You can net those against your tax losses to reduce your liability.
Yeah.
And those losses also can be carried forward indefinitely. So you could run this strategy for like years and years and years and say like you put in K to a strategy like this, you could generate several $100,000 in tax losses over many years and just keep that in the bank to kind of offset any sort of liabilities. Now, this is something that is like it's on Wall Street, like it's available, but like to ultra high net worth in institutions because the minimum account size for something like this is $1 million. Okay, so a lot of people are priced out of that, but with our technology and our algorithms, we're able to bring that down. We're still figuring out the minimum, but it's going to be something like 10 or 20K. So a lot more people obviously can access that.
That's a really cool feature. Dang, knowing all of that information is so valuable. I have so much to learn. I mean, this is pretty foreign to me in the financial world of how this all works, but it's
Yeah.
fascinating to know that
Well,
like
I'm glad you
things
think
are even
so.
possible. Like
Yeah. I
things
mean,
I
that's
wouldn't even
Steve,
think.
this is exactly my mission at Alpha AI is like I
Yeah.
love, educating people on this and making it accessible to everyone and so everyone can benefit.
No, everyone can benefit from this for sure. How do you see this being a benefit to RIAs who you guys are working with too?
Yeah, so I mean, in this industry, like you can go direct to consumer or you could sell to RIAs because the RIAs are also trying to build their book of business and they run a lot of different products and solutions like in the background. So it's not like if you sign up to an advisor, they're going to be doing every single thing in terms of managing your portfolio behind the scenes. A lot of it is especially for them to differentiate themselves and kind of justify the fee that you pay to have an advisor, they need to be able to offer like differentiated products, right? And so tax aware long short is one of them, but because of the $1 million minimum, it's like I said, it's not available to the majority of investors and therefore not available to the majority of RIAs, right? So only RIAs that cater to ultra high net worth or family offices, right, institutions, things like that can offer such a product, but now, if we sell to RIAs this product, we can make it broadly accessible. So more RIAs can benefit, more RIAs can be tax aware. And then, we'll offer it at a low minimum and like a very kind of reasonable fee, something like again, this is all developing, right? So something like
Yeah.
50 starting at 40 or 50 basis points, way cheaper than like the 2 and 20 or whatever that hedge funds charge, right? Yeah, that's kind of how it can benefit advisors.
Well, where can advisors go to get in touch with you? They're curious to learn more about that.
Yeah, check out our website, www.alphaai.capital. We're also building out an advisor-specific site, so you'll find all the links on there. I have a few kind of research papers I published on this, and of course, you can always reach out to me, and I'm happy to chat anytime.
It's amazing. Oh, it's so cool to see what you're doing. You're going to be a billionaire. I can't wait to watch what
I,
happens.
I don't know about that, but one step at a time, and we're just trying to get to the next step and make Alpha AI successful, and
Yeah.
help as many retail investors out as we can.
Yeah, when you're in the middle of it, you're like, I just want to stay afloat. We're not thinking about the long term,
Yeah,
but that's
yeah.
that's the goal. Well, on a positive note, I'm curious what has been like one of the most fulfilling days in building your business or has made you feel like, okay, what I'm doing is worth it? Because I'm sure the percentage of good days versus bad days might be, significantly different.
Yeah.
So, what's been like that one moment that you've been like, this is working. This is exciting.
Yeah, I mean, I think it's a few, right? So when we first launched our public beta, I didn't know if anyone would sign up, but to my surprise, like people would sign up. They trust a new company and someone they don't know with their hard-earned money, and so that was super like a great thing for me. And several months later, the early cohort of users were still there, and not only that, people were emailing me with praise about how and back then when we launched, by the way, it was the election. And so after the election, like the market took off, but then it pulled back a lot. And our algorithms were able to like avoid the pullback. And so people were really like impressed by that. And, so having that validation from them that we're kind of really solving the problem for them and they see the value in the product was like really good for me. And then, fast forward to now, we're trying to launch a few different things, right? It's really chaotic in my head right now, but users will come like because they're beta users, so they want to give feedback and they'll come with ideas for like the pipeline, right, of things we should launch. And just this week, like many users emailed me with the exact things that we're launching, which was like huge
Really?
validation. They were like, "Oh, we want to like, are you going to be launching a crypto ETF strategy soon, right?" And I'm like, actually, we are, right? And there's some other like little features in the app that they wanted to see, and I'm like, oh, actually, those are coming as well. So it's validation that like all my user research has paid off, and I do kind of really understand who our ICP is, right? And we
Yeah.
are closer to reaching that product market fit. I can't say we have yet, but we're closer, and that makes me happy.
That's amazing. That's when you know you've built a loyal following when they're starting to get
Yeah,
involved and they want to help you build with it. So that's the dream I think of any SaaS builder is that you have a community who's loyal to that and wants to see it succeed too.
yeah, definitely. I think so.
That's really exciting. Well, thank you so much, Rich, for your time and for sharing all of your insights. Is there anything else that you would add about Alpha AI and ways people can learn more about what you're doing?
No, I mean, nothing. I think we covered a lot on
Yeah.
this, but no, I'd just like to say thank you so much for having me on, Austin. And yeah, it was really fun. And yeah, if anyone has any questions, don't hesitate to reach out. You can find my contact on the website.
Great. Well, thank you so much for your time. It's been a pleasure to interview you and learn more about your product. So, hope everyone goes out and does more research and follows along with your journey and that they take advantage of this product. It's amazing.
I appreciate the kind words, Austin. Thanks again.